It's Sunday the 10th of October 2021. I'm just going to do a bit of a review of the gold price and some of the other macro data driving it this week, and a couple of stock charts as well. Just a quick reminder that if you're watching this video on YouTube, the vast majority of the videos I put out now are on Patreon, which is $6 a month to subscribe. Still do an occasional free one, but most of especially the stock specific content is on Patreon. So $6 a month US subscription, and I usually put out a couple of videos, some more deep dive stuff, thoughts about maiden resources, feasibility studies, that sort of thing. Got a couple of them recently with the predictive discovery, De Grey mining. I'll put out a video today as well, and Tietto minerals as well. So most of the content's on there. If you want to have a look, I'll put in a link in the YouTube video notes. So in terms of the gold price this week, showing a little bit of strength toward the start of the week. I think there was a few expectations that maybe the jobs data that was due on Friday might come in on the weaker side. There had been some leading numbers suggesting that maybe some of the stuff with Delta variants and sort of re-lockdowns and this stuff might mean fewer jobs are added than the economists had expected. So gold was showing a little bit of strength. If you remember, there was the key data point. This is a key data point because the Fed had said at the last meeting that they were really looking for this jobs number as the guide to whether they would stick to the plan of tapering in November. Now this data has come out and it's on the weaker side. So the jobs number came out and added 194,000 jobs versus 500,000 expected roughly. So this was a significant underperformance versus estimates. There was some revisions to the prior months that offset that a little bit. So initially the gold price really spiked on this. It was up kind of $20-25 immediately in sort of half an hour after this data came out, and then got sold back all the way throughout the day. I think this was probably not quite weak enough for the Fed to change its tapering plans, or at least that's the kind of market reaction that the plan to taper is probably still intact. Barring any other sort of data, but based on this purely, it's probably not weak enough for them to alter course. And some of the other bits in here, there was quite a bit of earnings growth. Average hourly earnings were above expectations. The headline unemployment rate was better than expected as well, and also the participation rate was lower. So this is kind of in the short term probably. It's more of it again goes with this kind of stagflationary data where you got a lower unemployment rate, got higher average hourly earnings. So this is potentially showing inflationary pressures, but at the headline, you've got fewer jobs being added. So it's I think it highlights the box the Fed is in, and it's probably that box is going to get tighter and tighter over time. But it's a continuing trend of weaker economic data. And some of the other information, the Atlanta Fed Q3 GDP, I think, has dropped significantly as well. It's down to kind of 1.5% now as well, what the GDP expectations are for the third quarter. Again, sort of going with this trend of weaker data. So I think the Fed, that taper, the market view, and that was what played out on Friday in the US, that as the day went on, the gold price was sold back down because there's still this expectation of the taper, and that being negative for gold. So it closed basically flat on the day and pretty much on the week as well. Some of the stocks did a lot better, which I'll talk about. S&P 500, probably, it's probably trading with gold at the moment. I think a very weak data point there, and I said this last week in the video, may have been actually positive for stocks because it would have delayed the taper, and caused sort of, the markets to think that the Fed would continue to remain very accommodative, and that might push stocks higher. So I think the Fed, initially this was viewed maybe in that sense, and then probably as the day wore on, it was maybe viewed in the sense that, they're not going to actually change the tapering timetable based on this data point alone. There is the stuff with the debt ceiling. That's more political theatre than actually reality. They've only deferred that decision though, so that will come around again. But every time there's a debt ceiling discussion in the last 5 or 10 years, they always have to up the debt ceiling, obviously, but it probably has less impact every time it comes around. So I think that'll be the impact. That's kind of a sideshow, but the tapering had kind of, I think, been almost 100% baked in, and maybe the market thought, oh, it won't happen initially. But I think the trend at the moment in the broad market indices, both the S&P 500 and the ASX 200, the trend is down. And any of these sort of short bursts that look like they're being sold into a bit. We haven't seen any kind of real hard sell-off, but it wouldn't surprise me if something like that were to happen in the next few months as a taper becomes more possible. Some of the stock charts, I think I'll have a look at the ASX 200 actually just briefly. It probably looks weaker than the S&P 500. I think it's selling off a little bit harder. I said that last couple of weeks. It really, probably the mining stocks there have generally been selling off, like iron ore stocks that had been driving the market quite a bit in the middle of the year. Some of them are not pulling it up as high as they were, and the rest of the market's a little bit sideways. So I think still the trend looks down there. It's not hugely down, but rallies look like they're being sold into, and then you're having these big falls. These big red bars, these 100+ point moves. So it's not a strong looking chart in the short term there either. And it's hard to see what the catalyst is in the short term either. If we look at the gold mining indices, GDX, at bottom last week, as did the GDXJ, and it's rallied relatively well. I mean, it's only up kind of 1.5 points from the lows, or maybe 2 points. So it's kind of that 5 or 6%. But a lot of the mining stocks got sold off on Friday after that initial strong open with the gold price, and then sold down all day to be kind of, the index a little bit up on the day, but pretty weak. And it's back to that kind of support level that it broke through around that 31 level. So it's not a particularly strong looking performance there. I'm sort of leaning to the potential that we could be getting something like what we had in March, where the mining stocks are leading the gold price. And you remember then that the mining stocks sort of rallied a little bit, and then we had the gold price sort of roll over, but they made a higher low. And I feel like we're maybe somewhere at this point here, we're potentially at that little rally point before we move to another low, but a higher low. It just feels like it might be a bit of a false dawn in terms of the rally in the mining stocks. But you do get good moves off the bottom in some of these companies, even with the index only up 5 or 6%. A lot of specific names, moving up sort of 10 or 15% on no news, and stocks doing well on news releases as well. If we look at the GDXJ, pretty similar. It's probably rallied a little bit better from the low there. Rallied about 3 points. So what's that? Probably 7 or 8% from the lows. That index had been sold off a lot harder. I've been looking for a few sort of specific opportunities in kind of illiquid names that are not even in the GDXJ, but those, I guess, that category of developers where they're sort of probably a sub $200 million market cap, and they may not be in the GDXJ. But I think again that it's pretty similar looking to the bottom in March, where it rallied for a couple of weeks and then in terms of the GDXJ, made a lower low, but not on the GDX. So I feel like we might be at that point here. I'm just a little bit skeptical that this rally of the bottom might be short-lived and we might roll over again. But still, I'm not selling what I've been buying down at these lows, because I still think we're close to a medium to longer term bottom here. I'm not short-term trading the stocks that I own. Northern Star, I've been using that one as a bit of a bellwether. I posted on Twitter last week. This day below here, when it dipped below $8 very briefly, I said that was probably the bottom, and I still think it will be. Again, I could see this chart rolling over, but I don't think it will reach the lows there. Obviously, there's a lot of data can pass before we get to that point, but I just feel like we might roll over again. But that ultimately that low will hold below $8 there, and often that's what you get when these double bottoms. You get sort of a sharp first bottom, and then a more sort of prolonged bottom that doesn't reach the low of the first one. So that's what I'm looking for in a few of these charts. Silver Lake, again, that's another one that I've been talking about the last couple of weeks. That's had a nice little rally off the bottom there. That's what I mean. You can have a stock like this rally. What's that? It's rallied 20 cents. It's been around that low 130s quite a bit. I've been buying there, and then you have a 20-cent rally. So it's it's a good 15% move. If you're trading the stock, that's really nice sort of potential trade there. We've got quarterly season obviously as well. on the ASX and in other markets as well. We've got the mining stocks producing quarterly reports in the next couple of weeks. So that's something else that can change these trends, that they're not just driven purely by the gold price. So I'll be doing my standard quarterly reviews of a lot of the ASX mining stocks as well. Even in names like B2 Gold, that's had a nice little rally off the bottom here. Not as much. It's only probably it's probably rallied 8 or 9% as well. But it's probably still likely to keep getting sold off with the gold price. But I think there are opportunities, like I said, in some stocks with specific news. We saw West African Resources. That's another stock that I've put a video up this week for those not on the Patreon channel, but there is a video coming out today as well. So it had a very nice move there. Even stocks like De Grey, I'm not a huge fan of the stock just from pure valuation, but it has had a very nice move this week. So there are opportunities in this market. I don't think everything's getting completely crushed, that you can't make any money in specific names. My two largest holdings, West African Resources and Adriatic Metals. Adriatic Metals also at a new high this week. So there are names that are making good gains in this market. So it's not everything under pressure, but in that particularly in that mid cap space, I think there's a lot of value there because they're just getting sold off with the gold price, and company news isn't making a lot of difference. So companies like B2 Gold, Northern Star's probably getting the large cap, SSR Mining. Again, so a few of those just getting suppressed and not trying to rally, but not getting much love. And I think will roll over again if we get the gold price rolling over. But that taper, it's kind of, that trade looks like it's almost done. When something's 100% baked into the market, that's when it kind of probably gold can start to bottom. I don't know what else is going to drive gold lower when a lot of the economic data is looking on the weaker side. As I said, that stagflationary picture, especially if we have, I think with the move in energy prices in the last couple of weeks as well, that inflationary mindset is starting to creep in a little bit, where, or at least in market commentators, are starting to realize that this might be more than a short-lived transitory burst, that there might be some forces here that are going to last a lot longer. If we have problems with northern hemisphere winter, energy prices move again. And I think energy prices are a key thing that people look at when they're thinking about inflation. Food prices and this sort of stuff probably sort of gets pushed to one side, dismissed a little bit. When it's energy prices, the market's always watching the oil price. It's a bit more obvious. So if those trends start picking up and we start seeing bond yields move higher, not because of economic strength, but because of expectation of higher inflation, and that being more sticky than had been expected, and how the Fed is guided, and there's still this view maybe that the Fed can try and do something about inflation, but ultimately I think that will not be true. We know that they're really going to try and jobs are the more important thing for them rather than trying to control inflation, especially since the sensitivity of the US economy to interest rates is incredibly high. If they start to think about raising rates, then you'll start to see the market probably go a lot lower. And general economic data might start to roll over as well. So I don't see them doing that. That's still a discussion probably for next year. But in short term, most of the data seems to be on the weaker side. So it's hard for them to sort of continue that narrative of a strengthening economy when the data is not really supporting that. But for now, it looks like that taper is intact, and they'll try and push that through by the end of the year. But I still think that they may look for an opportunity to defer it again. If we get political problems or whatever, that might be enough of an excuse, or China worries. Any of these things might do as an excuse to change the taper timetable. But at the moment, the gold market's probably saying that it is still going to happen, and it's still, the market still remains subdued while that's the case. But if taper gets fully off the table, I thought if there was a negative number perhaps in that jobs number, that would be enough to really change the narrative. But even though it was on the weaker side, it wasn't weak enough to change the narrative, and there's still this strengthening economy narrative, and this is just a blip on the radar, this sort of stuff, still winning out for the moment. But if it was negative, that might have been enough to shift expectations. And then I think you would see gold price rally a lot harder, but we didn't get that enough of a bad number for that. So Still need to see more economic data, but I'm still of the view that they'll taper based on how the market's reacted here. So that's probably enough for now. And as I said, if you're interested in more content, particularly stock-specific content on the ASX companies, have a look at the Patreon page in the link. Thanks very much.